Hello and welcome. You have tuned into World Business Report here on News 9 Live. I am Krishna Kumar. And we begin this edition of World Business Report with the latest on Neuralink, the first human implanted with a brain chip from Neuralink has reportedly fully recovered, with Elon Musk stating that the patient can control a computer mouse using their thoughts. Musk said in a Spaces event on social media platform X, and I quote him here, "Progress is good and the patient seems to have made a full recovery with no ill effects that we are aware of. Patient is able to move a mouse around the screen by just thinking." Neuralink aims to maximize mouse button clicks from the patient following successful chip implantation last month, and the company, with grand ambitions for treating various conditions, faces scrutiny, bear in mind, over safety protocols. Away from Neuralink, India and South Africa are set to block a proposal led by China at the WTO, the World Trade Organization, opposing an investment facilitation agreement. They argue against extending the customs duty moratorium on e-commerce, citing significant annual losses. These issues are under discussion at the ministerial level talks in Abu Dhabi. India and South Africa are arguing that such decisions taken outside the framework should not be included and are set to block its inclusion. India has taken this stance on joint statement initiatives including gender, MSMEs, and domestic regulations for services. While some countries are yet to endorse this agreement, India and South Africa are opposing its inclusion, preferring decisions within the WTO framework. Away from that, Republican presidential candidate in the US, Nikki Haley, has asserted that she will not, quote-unquote, kiss the ring or fear Donald Trump's retribution, highlighting concerns over threats from his campaign against his opponents, his backers. Despite pressure to withdraw from the race, Nikki Haley remains steadfast, drawing Mr. Trump's ire, who currently leads the national Republican polls by a significant margin. Polls indicate that Haley trails by 60 points nationally and over 30 points in her home state. Listen in.
We don't anoint kings in this country. We have elections. And Donald Trump, of all people, should know we don't rig elections. I feel no need to kiss the ring. I have no fear of Trump's retribution. So I hear what the political class says, but I hear from the American people too. That's why I refuse to quit. South Carolina will vote on Saturday, but on Sunday, I'll still be running for president. I'm not going anywhere. It's not normal to spend $50 million in campaign contributions on personal court cases. It's not normal to threaten people who back your opponent. And it's not normal to call on Russia to invade NATO countries. Donald Trump has done all of that and more in just the past month. Donald Trump was the right president at the right time. But times change, and so has Trump. He's gotten more unstable and unhinged. He spends more time in courtrooms than he does on the campaign trail. He refuses to debate. He's completely distracted. And everything is about him.
Away from Nikki Haley, but keeping it with the US, stocks on Wall Street saw some broad declines on Tuesday, with the Nasdaq taking the biggest hit as chipmaker Nvidia stumbled ahead of its earnings report. Despite gains in Walmart, The Dow Jones Industrial Average remained subdued. Nvidia's quarterly results are set to release on Wednesday, weighing heavily on investors' minds amidst concerns over its valuation. This Reuters report gets you the latest from Wall Street.
U.S. stocks fell across the board Tuesday, with the Nasdaq showing the largest declines as chipmaker Nvidia stumbled ahead of its highly awaited earnings report, while gains in Walmart kept losses on the Dow Industrials in check. The Dow slipped 0.2%, while the S&P 500 fell 0.6 and the Nasdaq dropped 0.9. Investors are concerned whether Nvidia's quarterly results, expected after markets close on Wednesday, will justify its expensive valuation and continue to fuel the buying frenzy around artificial intelligence-related stocks. Shares closed down 4%. Nvidia has become the fourth most valuable public company in the world and Wall Street's most traded stock. Walmart, however, finished 3% higher after hitting an all-time high during the trading session, as it posted strong quarterly results and gave an upbeat outlook. The latest down day on Wall Street follows a weeks-long rally that stalled last week. Hotter than expected U.S. inflation data pushed back market expectations for the timing of a rate cut from the Federal Reserve, which Retirement Planners of America CEO Ken Moraif said is what he thinks is driving the market now.
I think today is the continuing digestion and indigestion of the data that in some instances is hot and other instances is cold with regard to inflation, and whether or not the Fed is going to lower interest rates or maybe now they're going to raise interest rates. So all this confusion about these conflicting data points, I think, is causing some people to take some profits and wait and see.
The next rate cut is expected in June, according to a slim majority of economists polled by Reuters, who also flagged risk of a further delay in the first cut.
Keeping it with the U.S., Walmart reported robust profits and sales for its fourth quarter, bolstered by increased spending from inflation-pressed shoppers. The retail giant also announced plans to acquire smart TV maker Vizio for $2.3 billion, sending its stock soaring to an all-time high. Take a look at this detailed report.
Walmart on Tuesday reported strong profit and sales in its fourth quarter ending in late January, after inflation-squeezed shoppers flocked to its stores. It also gave an upbeat sales forecast for the next 12 months and confirmed a report that it would buy smart TV maker Vizio for $2.3 billion. Walmart's stock rose 6% to an all-time high during morning trading. The retail giant announced a 9% jump in its dividend, the biggest increase in more than a decade. Analysts say Walmart has benefited from its focus on groceries and keeping these prices low as consumers deal with high prices elsewhere. While the company continues to spruce up its massive stores, expand its selection of online merchandise, and offer more pickup and delivery options. CEO Doug McMillon said it passed $100 billion in global e-commerce sales in 2023 for the first time. Walmart's proposed offer to buy Vizio for $11.50 per share in cash is another bet on the retailer's fast-growing U.S. advertising business. Analysts say it could help it build out a vast panel of connected TV users through owning and operating Vizio smart TVs and Vizio's SmartCast operating system, giving it more space to sell advertisements. In the fourth quarter, ad sales rose 22% and are a bigger margin driver than its traditional grocery business. Vizio's shares rose as much as 15% in morning trading to around $11 each. They were trading below $8 the day before reports of deal talks emerged.
Away from Walmart and Vizio to Barclays, which unveiled ambitious plans to boost its struggling share price, aiming for more than $2 billion in cost cuts and a $12.5 billion return to shareholders. The bank also pledged investment in its UK retail banking operations while aiming for a modest de-risking of its investment banking arm. Take a look at this.
Barclays is on a mission to revive its struggling share price. The bank laid out major plans on Tuesday, including a cost-cut target of more than $2 billion. It also said it would return $12.6 billion to shareholders and invest in its high-return UK retail bank. Barclays did not disclose how it would achieve both the cuts and a modest de-risking of its investment banking business. The strategy update came as it reported a 6% fall in annual profit to $8.3 billion. That was in line with analyst forecasts, as a higher charge for potential bad loans weighed. Barclays said it shed 5,000 jobs last year, with much of the cuts falling across back-office roles. It further said it would review the future of its payments business. Markets liked what they heard, and shares rose by as much as 7%. The announcement was Barclays' first strategy update in almost a decade. It also marks a key moment for Chief Executive C.S. Venkatakrishnan. He's eager to improve returns after a period of management turmoil and underwhelming results.
Capital One's acquisition of Discover Financial for over $35 billion aims to reshape the global payments landscape, pitting the combined entity against giants like Visa and MasterCard. The deal, uniting two major U.S. credit card companies, also creates the sixth largest U.S. bank in terms of assets. While facing scrutiny from regulators and politicians over consolidation concerns, the companies anticipate significant savings and expect an approval on the merger by early next year.
Shoppers worldwide may soon get a new option for how they pay. U.S. bank Capital One said Monday it is buying credit card issuer Discover Financial for just over $35 billion. The deal is meant to create a global payments giant that can better compete with bigger rivals like Visa and MasterCard. It would combine two of the largest credit card companies in the U.S., putting it head-to-head with major players like Citigroup. But the transaction will also create the sixth largest U.S. bank by assets and is sure to attract scrutiny from watchdogs. Some Democrat politicians are strongly opposed to bank consolidation, arguing it hurts consumers. Credit card fees are also a hot topic, with strict new rules proposed by regulators. The two companies say they expect the agreement to generate $2.7 billion in savings through cost-cutting and other measures. Despite the scrutiny, Capital One says it expects the deal to be approved by early next year at the latest. The bank is backed by investors including Warren Buffett and is currently the number 4 player in the U.S. credit card market.
Away from the U.S. to China. China slashed its benchmark mortgage rate by 25 basis points to 3.95%, the largest reduction since its introduction back in the year 2019. This unexpected cut is a major boost for buyers amidst ongoing challenges in the real estate market, marked by the collapse of major developers, including the giant Evergrande. This next report tells you all about it.
China is taking dramatic action to prop up its ailing property sector. On Tuesday, the country did the biggest ever reduction in its benchmark mortgage rate. The 5-year loan prime rate was slashed by 25 basis points to 3.95%. That's the most since it was introduced in 2019, and far more than analysts had expected. The rate is the key factor in the pricing of mortgages, so a cut should help buyers. Beijing has stepped up efforts to help the real estate market, but its moves have come in fits and starts. The sector has been rocked by the collapse of major property developers, including giant Evergrande. In 2023, new home prices saw their worst declines in 9 years as buyers grew wary. Worries over property, which accounts for around a quarter of China's economy, have also seen stocks tumble to 5-year lows. On Tuesday, most analysts said more would need to be done even after the rate cut. One told Reuters it wasn't mortgage costs deterring buyers, but the fear that more developers could go bust. Some argue tackling such concerns could require injecting cash into lenders, housing projects and property firms.
With the focus on Asia's largest aviation event, the Singapore Air Show, which kicked off amidst many challenges to the aviation industry globally. Over 1,000 companies from over 50 countries. Industry giants like Airbus, Boeing and Lockheed Martin, alongside Chinese competitors COMAC and Avic, showcased the biggest aviation gathering. And take a look at this highlights report.
Singapore kicked off Asia's biggest aviation gathering on Tuesday. The Singapore Air Show comes at a challenging time for the aeronautical industry. It's dealing with a rebound in post-health crisis travel demand while facing severe supply constraints. Over 1,000 companies from more than 50 countries are participating in the air show. It's led by Western industry giants like Airbus, Boeing and Lockheed Martin. And Chinese competitors such as COMAC and Avic are also in town. COMAC posted the first aircraft orders of the event as Tibet Airlines agreed to take 50 jets, while US playmaker Boeing saw Royal Brunei Airlines order 4 787-9 Dreamliners. Boeing also held a signing ceremony to mark a recently placed order for 45 of the wide-body planes by Thai Airways. It's positive news for Boeing, which is under pressure after the mid-air blowout of a cabin panel on an Alaska Airlines 737 MAX early this year. The orders come with travel demand on the rise. By the end of last year, demand had made a near full recovery from pre-health crisis levels, though it still lagged behind 2019 numbers, mostly due to China's slower rebound. But major suppliers, planemakers and engine producers have struggled to keep up with the rebound in demand. The sharp downturn during the health crisis led to job losses, freight issues and an industry skills shortage.
Keeping it with aviation, Lufthansa faced its second strike this month as ground staff walked out on Tuesday, intensifying debate over its wages. So over 100,000 passengers are said to be affected by the stoppage, with Lufthansa operating only 10 to 20% of services at the affected airports, including major hubs like Frankfurt and Munich.
Lufthansa faces yet another strike. Ground staff at the German airline walked off the job on Tuesday. It's their second strike just this month and raises the pressure in wage talks. Over 100,000 passengers will be hit by the stoppage, which runs until early Wednesday. Lufthansa says it will only operate 10 to 20% of services at affected airports. That includes the country's biggest hub in Frankfurt, as well as Munich, Hamburg and more. Germany has been rocked by a winter of labour unrest. Strikes have hit air travel, railways and public transport as workers demand better pay and conditions. Lufthansa presented a new offer to some 25,000 ground staff last week, but Labour union Verdi called the offer blatantly antisocial. It is demanding a pay rise of at least 12.5% over the course of a year. Negotiators also want to compensate for inflation with a one-off payment of €3,000, or over $3,200.
Now, in a move that's likely to put pressure on the government ahead of the elections later this year, Kumba Iron Ore, an Anglo-American unit, became the latest business in South Africa's mining sector to announce job cuts on Tuesday. The mining sector faces widespread job losses driven by infrastructure challenges and declining commodity prices as well. Here's more in this detailed report.
South Africa's Kumba Iron Ore on Tuesday announced plans to cut 490 jobs as it struggles to overcome persistent rail bottlenecks. That adds to thousands of planned job losses across the mining sector due to infrastructure challenges and weaker commodity prices. Kumba, a unit of Anglo-American, said in December that it was curbing production to match the limited capacity at Transnet. The state-owned rail operator has been hit by shortages of locomotives and spares, as well as rampant cable theft and vandalism. In a conference call on Tuesday, Kumba CEO Mpumi Zikalala said that the proposed job cuts, combined with the restructuring of head office roles which started last September, would affect 10% of the workforce. The company said the restructuring is necessary for Kumba to remain competitive. Its shares fell more than 5% following the announcement. The news also comes after Anglo-American Platinum on Monday said it would cut 3,700 jobs in South Africa. That's after a sharp decline in metal prices slashed annual profit by 71%. Its competitors, Sibanye-Stillwater and Impala Platinum, are also planning layoffs. Job losses across South Africa's mining sector will likely put pressure on the ruling ANC ahead of elections due later this year. South Africa's official jobless rate, measured at 31.9% in the third quarter of 2023, is among the highest in the world.
And with that, we've completely run out of time here on this edition of World Business Report. Thank you so much for watching. This is Krishna Kumar signing off.